Andy mute. Andy unmute.
Hey, Stevie, I'm here.
There we go.
I just had to take a quick phone call, real important, but now I'm here now, buddy.
All right. Very good. Thanks for making it. Thank you, everybody else, for making it on the evening of Wednesday. My name's Steve Gomez. This is Andy Lindelof. We've been trading a long time together. We've known Dan Merkin, the CEO of Trade Ideas, since 1998. I am user number 3 in the Trade Ideas system. Andy is number 40 in the Trade Ideas system. We've been around the block a few times, so we're happy to be a part of this webinar this evening and help Dan and the Trade Ideas family that we've known forever. Just an incredible year of growth. It's been a very, very incredible year. Before we go forward, I did drop my bio in there if you want to know who's talking at you. Steve's bio is in there, and a lot of that bio does include a history with Andy as well. We've been around, including prop shops in China in the middle of the night and things like that. So anyway, let's get forward to the reason we showed up today, which is the trade of the week, September 7th. Disclaimer, just to remind you guys that we're not registered advisors. We don't manage money. We don't know how to tell you how to manage your finances. That's why those guys go to school and take those tests, the series tests. So registered broker, registered RIA, if you're looking for investment advice. We are just your humble content publishers here trying to give you some decent ideas and turn you on to some really cool technology. I'm going to spend a couple minutes on this slide like I normally do. I feel it's very important, especially those of you who don't have a subscription and you're thinking about signing up. And, you know, we don't offer a free trial, but what we do have is a promo code at the end of the webinar. Well, Scott will show you how to save some money off just a 1-month subscription. And if you do sign up for that 1-month subscription, that entitles you to a free one-on-one session for 1 hour. Myself, with Jamie, with Andy, anybody here that can help custom tailor what it is you're looking for to use the Trade Ideas platform. And we feel that in itself is invaluable. So, you know, with a nice promo code, a 1-month investment, and then a 1-hour one-on-one, the value added there is incredible. And you'll know after 30 days that Trade Ideas is for you or not. If you're not interested in doing that, we'll talk later, but just a brief tease, we are going to have another one of our open houses in mid-October. Dates will be finalized later, but it's been a real good positive feedback in the past. We've had 2 open houses in the past, and both of them have gotten better. We've got some interesting, cool plans for this new 3rd open house sometime in the middle of October, but we'll get back to that in the future. You're not alone with Trade Ideas. That's the reason for this slide. That's the reason why I mentioned the one-on-one value opportunity. The daily trading room is open with Barry, who has the perfect repertoire of being a good trader and an absolute patron saint with managing all the questions that are coming at him and barraging him during the day. But it's a great way to demonstrate Trade Ideas technology, and there's some really good traders in that room too as well. It's a free room. I think we're cannibalizing a lot of the other paid rooms out there, and that's okay. That's just the way things evolve. So there's that. And then there's 4 webinars a week, including the webinar you're listening to right now. So all these things combined together, we have a great concierge service, and we pride ourselves in really making sure that new subscribers get the attention they deserve and help get them in the right direction because trading is subjective and everybody's got a different approach. So you're not alone with Trade Ideas. We are here to really onboard you, and we're very proud of that factor. And I think that's one of the main reasons we've had such incredible growth again this year. Word is getting out. Here's our agenda for today. Not too much deviation from the standard formula. We'll look at the market recap. We'll look at what Holly did today. The trade of the week this week is ASPS. We'll talk about that and why it was selected. And then I kind of backed into something unusual today. It's a way in which I can convey to you guys how we submit inputs to Holly, how the AI receives the base strategy to work with and then do its magic from there. So I've got a bit of a demonstration for you to hopefully that'll make sense. We'll go through what's working on my price alerts. If you recall, we set some price alerts last week. We'll check in with those and take a look at what strategies are working and what strategies are not. And then we'll set some more price alerts by the end of the hour, and that'll come up quick. I do apologize if you guys hear any loud military jets in the background. I live near Miramar Air Station, which is where they filmed Top Gun, and as it were, this week is the week of the Blue Angels, and they just made it known that they've entered town and they're flying around getting a surveillance, surveying the landscape of their show they're going to do this Saturday. So you might hear a jet fly by every now and then. That's okay. Quick check on Holly, the AI performance. This blue line is nothing really strange to us that have been focusing on what the S&Ps have been doing, flatlining. However, Holly's been doing a nice breakaway with a myriad of different reasons, newer strategies, better risk management, and things like that. So let's get started. Let's just move into the beginning of our presentation, which is looking at a market recap, which we always use the SPY. And for those of you that tune in weekly, you'll know these orange lines make a lot of sense, and they are still in play, these pivot lines. Basically had almost a full month of sideways action, except for this little up step here. But once again, what comes to mind is the wicks on the bottom end of these candles. Every day seems to be Groundhog Day, a repeat of the prior day. We open, we get soft, we stay soft in the midday, and then at the end of the day, a buyer steps in and creates these little wicks. One wick here, 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 just about everywhere. And you can see this orange line is the line that we're calling the guilty line. This market is still innocent until proven guilty, but you can see it's tried 3 times, 4 times to close below this line. It's okay to trade below. That's what we've been doing, trying to lift the carpet and see if they can run any stops. But candles on a daily chart really only matter what they look like when they close. Same goes with weeklies and monthlies. So once these candles closed up, the price action continued to stay in our margin of market being innocent until proven guilty. These 2 days here, Thursday and Friday of last week, closed exactly where they opened. We call those dojis. Just basically open, make a lot of noise, and close, no real net gain. But today and yesterday, we're starting to creep back towards this higher line again, where we had these 2 little devil horns show us that that is the line in the sand where the sellers are. Well, we're creeping back up, and we're creeping back up with the right type of candles, with the wick below showing us end-of-day buoyancy, holding a ball underwater and letting it go. That's what these candles are all telling me. So we're still in this crazy range until we close below this orange line. I'm going to say this market is still innocent until proven guilty. We can think all we want about elections and employment numbers and GDP revisions and central bankers, but in the end, buyers are propping this market up, and that's what the footprints in the sand are telling us. You want to add anything, Andy?
No, I agree. I mentioned over the last couple of weeks I didn't like the way, from a bullish standpoint, how the market was kind of hanging out in the bottom part of this range and testing it so many times. I felt like it could be weakening it. Now, we've got circular motion there, and now we have now we're pushing up toward the upper part of the range, and you have a double top over there, and you've heard things about there's no such thing as a double top or a double bottom. Usually when you try a third time, you break through. That's I would say the majority of the time.
Third time's a charm. Is that what you're saying? That's the axiom here?
Well, exactly. So yeah, and we're not talking about ranges. So obviously the lower part of that range, we've tested it. But if we were looking at a bottom, we reverse this, and we were looking at possibly selling off, and you had 2 double bottoms like that, the same thing can be said about the double bottoms. Yeah, it's like, okay, we tried once, okay, you tried twice, and usually it's a double top if you're going to turn over and go lower.
But the fact that we're moving,
seldom do you have like a triple top. Usually more times than not, if we do go up there and attack that high, like I said, I think we go through. Yeah.
The fact that we didn't sell off here would have called that an easy double top in hindsight, but we didn't. We're gravitating back up to the high end of our range here. So, like Andy says, you don't hear much about triple tops and triple bottoms. They don't really exist. So that's where we are. It's just a broken record once again until we break out. But the bias is still to the upside because we cannot close below the guilty line here. And the end-of-day buyers just continue to show up in droves. Who they are, we don't know. What they're doing, we don't know. But the footprints in the sand tell us that they want to buy and prop this stuff up. So that is it for the market recap. Still innocent until proven guilty. Um, Holly recap. You know, it's no surprise really that if you've been paying attention, the risk on, risk off has really been kind of the way to go lately. And when you look at a market like this that opens up and then dips into the negative and then chops around in the negative and then closes strong every day, that's not really a risk on type of day. A risk on type of day is a broad-based rally. Here's today right here. I'm circling my mouse over here on the open. We opened up positively for the moment and then plunged into the red for a good half of the day. Well, when I see that, I shouldn't have to look at these idiot lights here to know whether it's risk on or risk off. Holly was making an attempt at many long trades today. The market was kind of falling down and getting red. In that particular case, it's statistically noisy for these things to have a risk-on type day. So once again, even though risk-on did finish strong, you look at the histogram here, midday, threw a lot of fits. This is kind of a good example of what the market was doing. But Holly just doing risk-off, taking her profits along the way on a choppy type day that was down on the day. That was the way to go. But either way, a nice outperformance by Holly based on the spiders, which were only able to put negative 2 cents in today. Well, Holly definitely outperformed, and so we're very, very happy about that. Couple notes. Again, directional bias coming into today was long. You know, we only had one short, which is my baby. It's almost like watching one of your kids play soccer. This is the horseshoe down. This is my strategy that I submitted to Holly, and it's been doing okay. It made 4 cents on this particular trade today, but let's take a look at using Holly for continuation. I mean, this particular chart is not a healthy looking chart. This is the opposite of what we were just talking about. The wicks to the upside, every time we push up, sellers push us right back down. So that wick bias here and here, plus these gaps, this stock's having a bit of an issue. So I wouldn't have been surprised if somebody had maybe taken half off and maybe looked for a little bit more follow through or set a price alert on these daily charts, because that really is the design. You should be looking at every single one of these Holly trades and looking at the daily charts and seeing in your trader's hat, in your mind, if there is something of interest that you'd like to call attention to, and then of course you can quickly set your price alerts. There was one trade around, and for the most part, again, risk off was the order of the day. You know, the biggest loss that Holly took, and one of the best things that she's ever going to demonstrate to you, is risk management. You're never going to see Holly take a giant loss. That's something reserved for us humans, to start second-guessing ourselves and doubling down and adding down and then not believing ourselves. Well, let's just give it one more day, one more day. Those are the ones that turn into just back-breaking losses. I used to have them when I first started, and so did Andy. But we learned pretty quickly how to tend your garden and pull out the weeds and not let these things get too far out of hand. So Holly always does a great job of demonstrating risk management. 25 cents was the biggest loser. But again, you know, the biggest trade around opportunity could have been this ICLR. Holly exited for a profit save. We're seeing a lot of the profit saves, and it has been helping the performance. Again, think of profit save as a trailing stop. So what happens is once Holly gets into a trade and it starts working, the trailing stop algorithm starts getting real itchy. And a lot of Holly's trades are exiting these days on what we call this profit save or trailing stop. Well, this particular one, here's our entry candle. Here's our blue tag over on the right. So basically this was our entry. Decent little entry, but I guarantee you this little wick right here probably spooked the AI and took the profit that was there on the table as a profit save, trailing stop, but continued to move higher throughout the day. That's really the only example I can see. So pay attention to the profit saves, because these are very conservative outs. You know, Holly would rather take a 15-cent winner than go negative any day of the week. That's the new risk management, and so that's the way it's been going as of late. We'll see what we have to show tomorrow, but it's been just nothing but a bunch of longs, and the reason these longs are showing up is because these are the strategies with the hot hand. I am going to spend a little bit of time coming up here on how we do submit-based strategy for Holly, and for those that are curious, what really is happening behind the scenes every evening. Right now, as we speak, Holly's crunching the numbers on about 40 base strategies, and I'm going to spend a little bit of time going into that as to what exactly is happening. Anything else you want to comment on AI today? It was pretty quiet, but again, Andy, risk on, risk off, excuse me, seems to be the order of the last couple weeks here.
Yes, I thought the calls, the two alpha predator calls, the PCYG was a very, very interesting call after the stock had moved, almost like 80 cents. And then,
Yeah.
yeah, and, it was obviously relative volume. If you see the volume bar on the day was extremely high, even though it
Hmm.
only did 406,000. You had that prior high going over $11 going back there into the month of July. I thought that was interesting. Yeah, it's
Hmm.
like Holly, like you said, she just doesn't look back a few days. She looks
Yeah.
back several months, and I thought that was a very interesting and a very profitable one. Even with the risk off was 63 cents, the big winner for the day on the risk off column. I thought that was a great trade. And then of course that SGMS. You take a look at that, and Holly made that entry at 10.16. A lot of people say, "Wow, man, the stock just ran over a buck. That's over 10%. Do I want to make that call?" Remember, Holly bases things on her calls on optimization. What this thing's done over just months and months of back testing. So her back testing said, "Hey, this has the chance to really go much higher," and it did.
Yeah,
So.
you kind of stole my thunder there because you and I 3 years ago we would have looked at this and said, "No way, this thing's already ran too much." I'm not chasing. I'm not chasing.
Exactly.
I'm not chasing that. But what's chasing is just a word that's thrown back and forth between Andy and myself. What's reality is the numbers that don't lie. Holly said, "Hey, this is a statistically probable trade. I'm going for it."
Hmm.
So this is the whole thing that Dan Merkin is really trying to open up the eyes of people is that we're in a new paradigm here where the numbers don't lie, statistics don't lie, data doesn't lie, and sure we still have our preconceived notions, but every day it's kind of a new learning experience to see how some of these Holly trades are performing just based on nothing but numbers and back testing. So let's get to that. But
Sure.
first let's look at ASPS. ASPS was located, the genesis of this one, always looking for, sustainable upside, something that can work and continue to go for more than just a day or two. And focusing on the shorts, those are what have been working. This one was pulled directly off of the Squeeze Me play. Some of you may even have this, but here it is, ASPS, leading the charge. NAV, we saw what happened to that one the other day. The shorts probably had a lot to do with the size of the gap in that one, but that one's out of play. We're not talking about that. Going into this weekend, ASPS was showing at the highest end of the short float at 72% on 18 million, and that number is actually smaller. That's the total institutional float. I think the actual tradable float's around 9 million. But we have a stock here that did a breakaway gap down here, has been trending higher, trending higher. It's holding its moving averages, which we will have here soon, very soon on our trade ideas charts. But primarily, the short interest has me interested. It's trading way above all of its moving averages. I even put a disclaimer in the email that said this week the trade of the week is going to be a bit more aggressive, so you're going to have a little bit more wider stop down in these areas for the first stop area, and then down here for a more liberal stop. But trying to really let this thing run, and Andy doesn't really have any idea about this. I'm going to probably surprise him. Do you know what ASPS does, Andy?
Uh, is it something in financial? Maybe I'm wrong.
Something you and I are very familiar with, the mortgage industry,
Right.
and
Okay.
doing those types of things, mortgage
Yes.
notes and mortgage servicing.
Yes.
They have a whole suite of investor products. They're now helping investors do foreclosures and sales and things like that. But that had nothing to do with the selection. The selection had everything to do with the price action and the short squeeze. But I thought it was kind of funny that it's an industry that I fully understand. And let's
Sure.
back out just a little bit on the daily. This is about an 18-month range here, all right? Insiders have been buying. I don't like to base on that stuff. I'm just throwing that out there. I know insiders were awarded some new vested options, but the longer these types of long congested trading ranges go, the more potential energy we have built in. So, we just throw a basic markup for the most part using maybe excluding this, but using this and this as the two most recent levels of resistance, we're getting pretty close. and we're getting pretty close on a giant short squeeze. So again, last week we talked about patience. This could require a little patience. What I would really like to see is maybe it nuzzle up against this orange line over the next week or two, go sideways, and then explode through, and the short sellers don't even have a moment to realize they're underwater and hopefully in the midst of a giant short squeeze. So that's what's going on with ASPS on the daily. I thought it was interesting, I mentioned to Andy, the trade was active if it cleared this level right here, 34.21 or 22, and right on the open, this was Tuesday, so the trade triggered immediately, which is fine, rather than waiting for a pullback and never getting a fill. I do want to be in this trade. So if you look at the price action coming into this day, it's pretty quiet little 15-minute candles with small ranges, nothing really special. All of a sudden, the trade of the week triggered yesterday, and then we've got these wide, volatile candles back and forth. Look at this giant volume bar right here. It's hard to see, but there's a volume bar corresponding with that nice push up, and then low volume pullback. So I think this thing is doing the dance that it wants to try and find a way to get back to this orange line. But the short squeeze potential on this one is just, it's too much to overlook, and that's the trade of the week this week. I noticed RH, the trade of the week last week, is starting to come into play a little bit, and I've got some more to talk about later in the program. We used this pullback here on a Friday and said just enter on Monday. That pullback there corresponded to a pretty good gap fill, or at least a resistance gap fill. And then the entrance on this trade of the week from last week was basically right here. But you can see this one also, RH, 38% short. There's a short float going on this one too. And you'll also recall SQ is an active trade of the week. Not doing as well as RH, but still high up there on the short float, still in the money, just kind of hanging out, waiting for hopefully its big day. But that's been what's been working lately, guys, the short floats. And I've been seeing a lot of people I respect on Twitter echoing the same thing, and they're starting to show up with some of the same stuff that we've been talking about here for the last week or so. So that's our trade of the week in ASPS. Be patient with this one, and I think down the road, if this thing has its way, it could be one mother of a short squeeze. Okay, where to next? Let's talk about the AI. I know when Scott did his sample, we have a lot of people that use the AI, and I thought I'd take 5 or 10 minutes to talk about kind of what really happens, how the sausage is made, because there's always a lot of questions on where does Holly get her, how does she decide which trades are working. So let's take a few minutes here and go over something. This is something that was made today in one of my sessions. The guy knew exactly what he wanted, and we went through and configured it for him. So let's just take a quick look at the configure so we know what we're doing. All right. We've got a new high as our event, and our alerts are basically what he wanted. I explained relative volume to him. We got 40% more volume doing than it normally would do for that time of day. 5-minute volume, we cranked up to 200%. He wanted to trade stuff between 50 cents and $15, which is kind of a popular strategy these days, especially with the Alpha Predator. And he really wanted to make sure he had the float dialed in. So we dialed in the float of a minimum of 500,000 shares, which is just nothing, and a maximum of 35 million shares, which is, it's okay. But that's his universe for the float. Now, he also wanted to add RSI. He was a big believer that a 30 minimum RSI was what he wanted and an 80 positive was what he wanted. And I said, great. I said, well, what about, the bigger picture? Where do you want these stocks to be on a daily chart, on a 52-week chart? We can talk about position and range for a 52-week position and year range, or we can just pick a moving average like I use, is the 50-day moving average, and just kind of use that as a benchmark. Anything over a 50-day moving average is intact. Anything under a 50-day moving average might not be so intact. So he agreed, and we put change from 50-day moving average 0.01%. So everything on here is above its daily 50-day moving average. And in his world, a 5-day average of volume was only 100,000 shares. I prefer something more like 250, maybe even 300. But we'll leave that for Holly to figure out, because what I did next was I said, hey, this is kind of interesting. So since we built an alert, once we have an A window, we've got our time stamp, and we've got our price stamp, and those are the 2 data points that we need to run a back test. So let's go ahead and let's run a back test on this and see what we get. So I did the back test, and he explained to me that he wanted to kind of wait, on the open, and we started at the open, and he wanted to stop seeing them around midday. But I can already tell you I've adjusted these two parameters because of some optimization. There's just too much noise, and this goes for just about any filter out there. There's too much noise in the first 15 minutes to really try and get a grasp on a strategy that's going to be consistent and work. So I hardly ever pay attention to the first 15 minutes. And obviously, also, you guys will hardly ever see Holly take a trade in the first 15 minutes. And it's pretty much for that exact reason. They just don't test that well. So I said, let's see what we just made, buddy. And I saw the thumbnail, and oh, okay, well, wow, that's interesting. That's not usually what I see. Usually when I see somebody build a strategy with me, it's starting here and it's going down to the right. And my first immediate thought was, oh my God, this could be a Holly strategy. Now, why could it be a Holly strategy? And this is what we're going to talk about. A numerous amount of trades, over 1,000 trades, anything from 1,000 to 2 or even 3,000 trades, if they show up with this black gross profit line moving in the right direction, basically because we've got average winner 12 cents, average loser negative 7 cents, all day long, that's going to start to perform. The problem is we just don't really have it where we need it, and 1,000 trades is not going to get us anywhere, especially with a 1.44 profit factor. So these are the kinds of strategies that myself, Jamie, Brad, Andy, Dan, and everybody, when we see something like this going in that direction with a giant data set, and I'm going to explain why that's important. We have 1,000 trades here to work with. So I essentially submitted this to the development department today and said, hey, this might be a decent Holly strategy. I named it low float rippers because these things were moving higher quickly with relatively low float. That seemed to be the color of the strategy the guy was looking for that I was helping today. But here's what happens when we send this, and we're calling this now a base strategy. It's a viable base strategy because it's got over 1,000 trades, big data set, and it's moving in the right direction. We just need to do what we can't do humanly possible, which is what the AI does, is take about 40 of these different strategies and then work them down, optimizing them. And when I mean optimize, I click this button here. We're talking optimizing the time of day. We're talking optimizing other filters, anything to do from average true range to daily RSI to VWAP to gap. Anything that can be measured, Holly can measure against this and start to find out where the sweet spots are and cut out the red and just use the green. So that's what a base strategy is given to Holly. So what happens once Holly takes this? So bear with me for a second here. We're going to go into a little bit of statistical testing analogies. 1,000 trades is what Holly would go back and test. But we do it in a way where we call out-of-sample testing and in-sample testing. And the reason we do this, it's broken up because you don't ever want to have the criticism of, well, you just basically took all 1,000 of those trades and you had the AI custom deliver it to where it's just looking perfectly. And that's called curve fitting, kind of fudging on the numbers to make it look perfect. But will that really work in real life? But that's where Holly's a little different in the out-of-sample data. The in-sample data is usually about 70%. So what Holly will do with this trade when she eventually gets to sampling a base strategy to see if she can improve on it, she'll take about 700 of those trades, and those are called in-sample. And that's where the optimization starts, the constant tweaking, the constant rerunning, finding that perfect fit, that perfect puzzle piece where you might have 6 or 7 different filters in there with unique values that you never would have come up on your own. But again, the AI finds that to be statistically probable and the best fit. Well, we still have 300 trades that were not included in that testing. That's called the out-of-sample data. So once Holly, the AI, finalizes and puts the paintbrush down and says, this is my final strategy configuration for low float rippers, the AI will then take the remaining strategy and the configuration of that strategy and drop it into the out-of-sample data, which would be the remaining 300 trades that were never touched on the initial optimization. And so that's called in-sample and out-of-sample testing, and that's what really does help, create a more viable, confident return on those scores, because the out-of-sample data, those are the scores that we use. We don't want to be blamed for curve fitting and trying to make it perfect. That's the only way you can do that. You take that out of that in sample, those 700 trades, drop it into the 300 trades that are virgin and never seen the light of a back test, and if that sample comes out with a strong score, then we are good to go, and that's how Holly decides who gets to wind up on the starting bench the following day. So just a quick back scene, a little bit of information for those that are curious. How does Holly find her trades? They do have to be submitted in a base strategy, and then she takes it from there and really cranks it down, and for that matter, changes it every evening. Every evening is probably a little tweak here, a little tweak there. So that was the purpose of kind of showing a base strategy. When I did the configuration for this guy today on the one-on-one, that was my first thought. So if you happen to see low float rippers in the next couple of weeks show up here in the AI strategies, you'll know the genesis and the story behind that and how it came about. All right, where to next? What's working? Well, the only way we can tell what's working is to go to our price alerts. And if you guys, hopefully a good chunk of you were here last Wednesday night, because I shared 7 setups with the crowd and reminded the crowd how important it was that I make strong notes to myself as to what the strategy is, so when I can go back on a day like today and look back and see what's working and what's not working. So if any of you took these 7 strategies through the cloud that I gave, well, we can visually look right here and we can see the washout bounce. That's what's working. That's delivering some alpha. I don't know if you guys recall this ENB, but we took a look at this candle. This is the washout bounce candle, and the green line was set right above the high end of that washout candle, and well, sure enough, the very next day, that candle triggered, took a day of rest, and then gapped up, gapped up, and gapped up again. So this was an incredible reversal signal. The washout bounce. I'm really warming up to this. I've always been warm to this thing, but I'm really warming up to it even more now. So the washout bounce was a great strategy that worked last week. Let's take a look at Hubs. Hubs, this was the candle that we were identifying. I wasn't really super high on it because it didn't have a big fall. We were more in kind of a range here. But nonetheless, I said, let's set the alert at the high end of that range. Well, that range alert triggered yesterday and has slowly been working through it. Ideally, we'll see some more follow through from that. But again, keying off of these washout type candles, those were the 2 that worked the best. The trend change lubricant continues to work. Salt triggered today, and this was set last Wednesday night. So if we zoom out a little bit here, we drew this line of interest, and today it took a few days, and that's fine. That's what I want to see, back and forth, create some potential energy, and then boom, make your move. So would love to see salt have some follow through today. But once again, trend change lubricant. We're going to talk about that again today. And then what's this one? KDOK. This one was a short. This one is basically flat. It's up $3. This was the day after. This was the day it triggered. This was the day we set it. Don't really care to see that little wick down and wick back up. That is an example of a footprint of the HFT trying to run the obvious stops, and they didn't really get any follow-through. Didn't work. But they didn't get very far. They're coming back, and they might start trying to knock on the ice again. This trade is still open. But again, 3rd, 4th week in a row, I've been calling out to you guys, the short trades are just not creating alpha and following through. It's just not time to short this market yet. Here's a classic example. Here's our push through. It lasted 1 day and bounced back up. This trade should probably be closed if it was open as a short trade. It's showing itself that that was nothing more than a head fake. And then we have these other 2 ones that never triggered. This was a pullback alert. It never triggered to the pullback alert. And this was also a short, and this is not working. Well, it's not working because it never triggered, never broke down below there. So the takeaway here is, again, what's working? Make really good notes to yourself. I know right now the washout bounce has been a decent strategy. The trend change lubricant has been a decent strategy, and then trying to short this market has not been a decent strategy. Any comments on what's going on
No, you
there?
explained everything really well. Except I really think your Kodak Eastman Kodak short
Yes,
has potential
potential.
there because
Yeah,
it's not
yeah.
showing any strength at all. Even the
No,
last couple of days as the market,
no.
and it's come from $12. Yeah, I think that has potential to
Yeah,
still work.
unlike that other one that said that she'd be closed down, it did the
Right.
same thing, spiked down and then 3 green days bouncing back up here. You don't want that.
Hmm.
We didn't really drift too far away from the home base here, so there still could be
Hmm.
some follow through on this one. I'm gonna leave that one open.
Sure.
So that being said, let's move to the new category of setting some price alerts. So since I know the washout bounce is working, since I know the trend change lubricant is bouncing, I've got a couple, and I've got a couple more. I got one from the Squeeze Me Play, a couple from the Squeeze Me Play. So let's just get right into them. Um, I haven't been using this bullish piercing for a while, and I want to try and bring it back into the mix. The bullish piercing, if I double click here real quick, is looking for stocks that are beaten up down but trying to turn back up. SSW is the first one that I want to call out that I like. Look at these downside candles, downside candles. So it seems like the selling might be done. And again, these are like oversold bounce type strategies. So the first alert we're going to set, we haven't set any bullish piercing alerts in a while, but we're going to go ahead and try a couple today. High of 1398, so we'll go 1399, right click, and again, being very persistent on our notes so we know what's working and what's not. Bullish piercing is the strategy on this one. All right, we'll go ahead and set that one. The next one is deck, kind of like this one too. Many, many, many days of falling down and then putting in a nice little tweezers here, two little wicks to the downside. I think if this can follow through today's highs, there could be some additional follow through for a day and a half or 2 days. 6202 will be the limit. 6203 will go a penny higher. Bullish piercing, make sure we know exactly what that is. All right, that one's been set. So let's go to our favorite that's been the washout bounce lately. Washout bounce. Well, just so you know, I like to run a history of these at the end of the day and see which ones look good at the end of the day. Either take them home then or just set a basic alert, which we're going to do right now. So DFS is the first one that I kind of like. I would have liked to see more of a fallback, more of a pullback, but this particular stock is making some waves here. I would have liked to have seen maybe a longer candle, but here's what I do like. If you guys recall, this is always the best thing you can see. The washout occurred in the first 15 minutes, and that has all the signatures and fingerprints of HFT all over it. And when we see that, that usually means the coast might be clear to move higher for a few more days. So we're just going to use the high of today and use a washout bounce 59.57 on this one. Okay, we got to remind ourselves where we found it. There's one washout bounce. I've got a couple more. I am going to do NASDAQ. It's had a couple of down days. I would have liked a longer tail, but still, this is a stock that's high on the daily chart. And if this was making, new lows or was down here in the middle of the range, it might not be as interesting. But I think today this was a bit of a washout. And again, the reason I'm going to green light it is, look at this. First candle of the day was the washout. Signature fingerprints of HFT. All right. So we'll go ahead and set an alert at the high 70.96, we'll call it. Oops, I got way off on that one. Washout. All right, another washout bounce I had is WAL. Let's just take a look at a few more of these and why I wouldn't like them. This one has just got downside wicks everywhere. It's been in kind of a downtrend, gaps everywhere. It's not in an uptrend. I passed on that one. This one basically opened up down and traded higher, or so it appears, at least on the daily chart. I'm just going to go with that. FCFS, that's the same one. WCC, very obvious. This closes a spinning top. If this had closed near the highs up here, we might have something. But it fell back into its range, and that's why it never really showed up towards the end of the close. FHN. Yeah, not much of a wick. If this wick had taken out these levels down here and had a longer wick, I might have been interested. There's one in here that looks decent on the daily chart, but just quite do it during the day in terms of the way it should have traded. Maybe it was this one. No, I'm getting there. Hold on. Wanted to make an example of it. No. Well, you can see this one. Nice big washout on the day. I guess I'm not going to find it. All right, so my last one is WAL that I wanted to use. Okay. Washout, typical. First 15 minutes, that's what we want to see. Again, there was one on here where the washout took like a good 2 hours in the morning, and then it traded back up. And that was the reason I wanted to show you guys visually why I kicked it out and I don't like it. These have to have the washouts in the first 15-minute candles. That is the signature of running the stops with HFT. I'm convinced of it. Nobody can convince me otherwise. So here, the third one on this this particular one, wall, had a nice down day. You know, a decent tail, closing near highs, a little bit of a wick. So we're going to put it at the highs of today and see if it triggers tomorrow. 37.43. 37.43, and this is again the washout. Bounce. Okay. I could not find anything on the trend change lubricant, you guys. I tried. I really did try. The one that's on there is already working, salt. But everything else I looked at, I didn't like, and I'm not just going to throw things out there for the sake of throwing something out there. So the last two we're going to look at here are on the Squeeze Me, I believe. And I really like this one, EGRX. Let's take a look at the columns here. Short float, 44%. Look at the size of the float, 4 million shares. Okay, that's interesting in itself. But the daily chart, yeah, getting interesting here. This could be a really nice kind of a trend change lubricant looking chart with this little, you know, kind of cup building here. If this thing can get back above its recent high with only 4 million shares in the float and almost half of them short, you could see some fireworks. So we're not going to want to miss this one. We're going to make sure we do not miss this. 63.78. So we'll go 63. I'm sorry, what is that? 63.78. So we'll go 63.79. And we got to remind ourselves where we got this. And the last one that I find interesting is RH. I think there might be a secondary entry in this one. You see it was the trade of the week 2 weeks ago. We talked about it earlier on. It's still on the short float list here. But look what it's doing. It's starting to turn and make a new high. I think that this could be a great secondary entry if you can get back above these 2 wicks right here. So we're going to call that out because of the short float and the way the chart is setting up. 35.94 is what we want. Perfect. Squeeze me. All right. Those are the ones that I have for you. What I'm going to do now before I forget is for the people that have the ability to accept a cloud link on price alerts, let's send these over to you. So go sort by created. 1, 2, 3, 4, 5, 6, 7. Those are the 7 working alerts that we just set with some reasoning behind them. I'm going to share these 7 selected alerts. Copy all. So I'll call your attention to the chat window and the GoToWebinar tool window there. If there's a plus next to the chat, click the plus and that will expand the chat window. And I'm putting in the price alerts here for you guys. All you got to do is right-click, save link. And then once you've got that link saved to your clipboard, you just come over here to File, Load from Cloud, and those will drop directly into your existing price alerts. All right, did I miss anything, Andy?
No, man, you covered it. I'm just, this is your webinar. I'm just an attendee. So
VNDA.
You did a great job.
VNDA. Yeah, VNDA, Leon. You know, this is the world we live in. When Andy and I were running the Ditto Trade account where we were responsible for other people's money, we used to actually pull our opening drive alerts to avoid getting sucked into this kind of crap. It was Not the most conventional thing to do, but I know Andy will agree with me in the long run. It actually helped keep us in decent trades rather than getting stopped out only to watch the price action go higher. I'm sure you all have experienced that.
Oh,
And
yeah.
what you're looking at there, VNDA, is exactly right. That is nothing more than a broken market. Hopefully we don't have too much more of these in the future, but this is what happens when you have a market structure the way that we do right now. You're going to get these kinds of little mini flash crashes, they call them. All right, guys, that's it. One more question. Why wouldn't you take these washout bounces right before the close today? I do sometimes, Steve. I admit that sometimes, but for the sake of using price alerts, we got to have some sort of a identifiable entry. So I'm just using the price alert to trigger and miss a few cents. But the great example of what you're talking about, ECB was one of the poster children of a great washout bounce. Was that right? ECB? Why is that not coming up?
ENB, isn't it? ENB.
Well, yeah, that's also the same thing, because if you waited, well, actually no, because here was our washout candle. You had plenty of time the next day to buy it. I know that was ECB. Gosh darn it. Anyway, I had an example of if you decide to wait for the coast to be clear the next day, sometimes you might get a gap up, and that's not always what you want. This one, had a little small gap up here, but what happened to my ECB?
You keep trying to pull it up.
Really bugging me. I know that's what it is. Yeah.
Huh.
Anyway. Oh, is it TCB? Thank you. That's what it was. Here's our TCB candle that we focused on.
Good job, Leon.
Thank you, Leon. If you had said, well, this is a great-looking candle, it's right here at the highs, maybe I'll just wait and see if I can get a better price tomorrow. No, you didn't. You had to pay up, and that's what I hate. So, again, I really try and imprint on this ECB. Had a nice move up. All the people that bought old school here set their stops down below this gap. They all got washed out. That's the perfect coast is clear candle for me, and in this case, the coast actually was clear for many days. So to answer your question, you can do it both ways. You can take a chance, be more aggressive, and buy them at the close. I would prefer they're closing on highs if you're going to do that, or you can just set an alert for the high of that day like we were just doing here methodically. All right. Thank you for that. Thank you, everybody, for showing up. That's all I got for you tonight. Scott, why don't you come in? I know some people have been waiting all day to find out what the new promo code is to try out a first month at a good price.
Yeah, well, we're a software as a service company, and our subscription is our base of our business. So we have two tiers. We have standard and premium, and you can save on both tonight. You'll bring up the slide momentarily, but if you want a preview, you can go to the handouts panel on your GoToWebinar.
Sorry, Scott, I just spilled coffee all over myself.
You can clean it up. That's all right. But
I thought, hey, this is a good time to take a sip of coffee and just drill myself.
You're not using a dribble glass today?
Sippy cup.
Yeah, sippy cup. So if you go to the handouts panel on your GoToWebinar interface, you can just click plus next to the handouts. There's a PDF download that contains this and our contact information as well. We'd like to thank everyone by providing a code, and it gives discounts off of our subscriptions. We have two tiers, the standard and the premium. So that Alpha Week, all caps, it is case sensitive, takes 15% off instantly of your first month or year of premium, or 10% off your first month or year of standard. Great way to get going. Both of them come with either standard or premium, a full hour of one-on-one training with Steve, Andy, or Jamie. As soon as you sign up for a subscription with Trade Ideas, just go direct to support, click on training, and pick the best time and date for yourself. The standard includes a lot. It includes that training. It also includes your real-time data and also the charting, but the premium is really where it's at. And you saw at the beginning, if you were here for the preamble of the presentation, where the majority of the existing subscribers in the room do have access to premium, and there's a reason they made that choice. It gives them access to our AI, Holly, also price alerts, also our odds maker backtesting tool, and some other goodies that are a kind of high-level functionality. So you can't go wrong with either version, but the premium is really the best one to do. And at $188 a month to start, less that 15%. Great entrance cost. We really don't have a free trial. That's what our $99 a month standard is for, and then people upgrade to premium pretty quickly when they want to get access to Holly. Again, you can download this off of that PDF in the handouts panel, or you can just go straight to trade-ideas.com/price. Use that code before it expires. Thanks everyone for attending. Thanks Steve and Andy. You all will get an email reminder of where to find the recording by tomorrow morning sometime. The recording will be up tonight or tomorrow morning, and we will also be sending you might have already gotten it, a invite to tomorrow's trading studio. Andy's going to be there for that. Hopefully y'all can attend that as well. We have several webinars every week, and they're free to all of our subscribers and non-subscribers. Great information in all of them. Thanks, Andy. Thanks, Steve.
Thank you, Scott.
Yeah.
All right. See
Thanks,
you guys
everybody.
next week.
Bye.
Bye-bye.